not a huge amount, but I think it does signal something about their intent further out. So for us, QE has always been a very important signal for conventional monetary policy. And when markets are beginning to actually price in the start of tightening in the US and in a few other countries, the fact that the ECB is still very much pushing against the rise in yields does signal that tightening is going to be a lot further down the line for the Europeans.
And Elsa, to what extent does it matter that the rise in yields has been partially justified by the brightening economic outlook when it comes to the fact that the ECB hasn't ramped up its PEP purchases to date?
Well, I think there were a few people expecting them to be ramped up, but it would be more in line with the ECB's thinking to do that a little bit closer to the actual expiry date. So, if they are going to do something, I would expect to hear a little bit more about it in September or maybe even in December. The fact that they're not doing anything at this stage, I wouldn't read into that too much. I think the line that Jemima picked up about the envelope remaining the same but potentially stepping up the pace of purchases is particularly interesting. And it follows the path of the RBA. So this isn't just verbal intervention. They're actually saying, we're going to be there. We're going to intervene in the market if yields are not doing what they want them to.
And I guess the other question into today, and perhaps one for the press conference, is how the ECB will talk about yield curve control and how they feel about it at this stage. What's your take there? What can we expect from Madame Lagarde today?
I'd be surprised if they went down the route of explicit yield curve control, but I do expect some hints in that direction. And I think that line in the statement is certainly setting up the path for that. The fact that they have in the past stepped up the pace of purchases, not just in absolute size, but also relative to the capital key, I think is going to be what the focus is on today. They have bought more Italy, Spain, Portugal, etc. in the past, and so they could do that again.
It feels like, Elsa, all of the fireworks has been happening in interest rates. And actually, the euro, if you look back at the performance of the last couple of weeks, it hasn't moved that much. And looking at overnight vols, what was priced into today's meeting, again, implied vols are pretty subdued as well. Are you seeing that also in just general flows and interest from your clients at this point?
Absolutely. Selling vol is definitely a very popular trade out there. Even at 50 pips, which was the break-even for overnight euro implied vols, that still looked a little bit high to me and our traders. And I think it ties in with the fact that there's not an awful lot of interest in FX at the moment. Like you said, the fireworks are elsewhere. Where we do begin to see some interest is from non-FX investors. So people outside the kind of normal currency markets looking to FX vol as a cheap way to hedge some of their other exposure.